Hello, and welcome to a conversation about something we all use, think about, and occasionally worry about: money. For centuries, the story of money has been intrinsically linked with the story of banks. These big, often imposing buildings on street corners have been the guardians of our wealth, the facilitators of our transactions, the lenders for our biggest dreams. They are, in essence, the central nervous system of our modern economy. A trusted third party that we've all agreed to, trust. But what if that trust wasn't necessary? What if the very idea of a central authority for our finances was becoming, dare I say, a little bit old-fashioned? This is where a fascinating and often misunderstood technology called blockchain enters the scene, and it's asking some pretty profound questions. So let's break this down. On one side, you have the established order, banks. To understand the potential for a revolution, we first need to understand the empire it's challenging. So, what exactly do banks do? At their core, banks are intermediaries. They stand in the middle of financial transactions to provide security, trust, a whole suite of services that have become essential to our daily lives. The most basic service is safeguarding our money. When you deposit your paycheck, the bank doesn't just stuff it in a shoebox. It adds that value to its central ledger, a massive private database that keeps track of who owns what. This ledger is the heart of the bank, and protecting it is their #1 priority. Beyond holding money, banks are the primary movers of it. When you swipe your debit card at a coffee shop, you send a message to your bank, which communicates with the coffee shop's bank to verify funds, debit your account, and credit theirs. Alright, let's turn our attention to the disruptor, blockchain. The word itself sounds complex and futuristic, but the core concept is surprisingly elegant. At its heart, a blockchain is just a special type of database, a ledger, much like the one your bank uses. The revolutionary difference lies in how this ledger is structured and managed. Instead of being stored in one central place, a blockchain is distributed. So how does it work? Imagine a digital notebook. Each page in the notebook is a block. Each block is filled with a list of recent transactions. Once a block is full, it needs to be added to the notebook. To do this, a complex mathematical puzzle is solved by computers on the network. This is often called mining. The first computer to solve the puzzle gets to add the new block to the chain, and in doing so, it creates a unique, secure link to the previous block. Each block contains the hash of the one before it, creating an unbroken and chronological chain. Because each block is cryptographically linked, changing an old block is nearly impossible. A hacker would have to recalculate every following block faster than the rest of the network, a computationally monumental task, which makes the chain both transparent and immutable. So we have this decentralized, secure, transparent ledger. Why do its proponents believe it has what it takes to replace an industry as entrenched as banking? The first major point is security. Blockchain's distributed nature means no single point of failure. Corrupting the ledger means attacking thousands of computers worldwide. Another huge argument is cost and speed, especially for international transactions. If you've ever sent money to another country, you know it's slow and expensive. A 2024 World Bank report says average remittance costs are still over 6%. Blockchain can bypass correspondent banks, enabling peer-to-peer transfers in minutes with lower fees. Then there's financial inclusion. As of early 2025, around 1.4 billion adults remain unbanked. All you need is a smartphone and an internet connection. Champions talk about transparency and user control. Rules encoded and visible, users holding their own wallets. With banks, your data is theirs. They can freeze accounts and block transactions. On blockchain, users hold assets in personal wallets secured by private keys. It's a shift in power, from institution to individual. True ownership and control for some users. While the vision of a blockchain-powered future is inspiring, the road from here to there is filled with significant potholes and roadblocks. The technology, for all its brilliance, is still in its relative infancy. Perhaps the most talked about issue is scalability. Bitcoin processes approximately 5.7 transactions per second. Ethereum better, but far from what Visa handles. This low throughput makes many blockchains impractical for everyday use, like buying coffee. Next up is the colossal issue of regulation. Regulations exist to prevent money laundering and terrorism financing, and crypto has long sat in a gray area. Until global regulatory clarity exists, large institutions remain cautious. Then the human element, trust and usability. We may complain, but generations have been conditioned to trust banks. If your debit card is stolen, you call the bank and often get your money back. Blockchain offers no hotline. If you lose private keys, your funds are gone. Many crypto apps are too complex for mainstream users, and we can't ignore environmental concerns. Proof of work is energy intensive. Newer consensus mechanisms like proof of stake are more efficient, but the environmental debate remains. The industry must address these valid criticisms as it matures. For all the talk of disruption, it's crucial to acknowledge banks currently perform many functions blockchain is not equipped to handle. The most significant is the human touch, nuanced financial services. A bank isn't just a ledger, it's a place you can go to for advice. Save for retirement, apply for complex loans, consolidate debt. These services benefit from human judgment. Another critical area, banks provide a safety net and recourse. If your card is used fraudulently, banks will investigate and often reverse charges. If a transfer goes to the wrong account, banks have processes to retrieve it. That safety net is largely absent in decentralized systems. Immutability is also a weakness here. No centralized authority for dispute resolution is a major advantage for banks for average consumers. Banks are deeply integrated into the legal and economic fabric of society. They are the primary agents through which governments enact monetary policy. Banks can be sued, audited, and held responsible. That legal framework provides stability an anonymous network cannot. Finally, banks provide a simple, unified user experience. Debit card, checking, bill pay, loans under one login. DeFi today is fragmented. Multiple wallets and apps required for different assets and services. Banks have spent decades refining UX to make finance simple for end users. To truly grasp the differences, let's put these two systems head-to-head on a few key metrics. First, trust. In banking, trust is institutional. Regulated and insured entities protect your money. In blockchain, trust is technological and distributed. You trust the code and network consensus. Transaction processing through banks often uses centralized networks like SWIFT and multiple intermediaries, slow and fee-prone. On blockchain, transactions broadcast to a decentralized network and are verified by many nodes, faster and cheaper for cross-border but not always for tiny everyday payments. Accessibility. Opening a bank account usually requires ID, proof of address, sometimes minimum deposits. Blockchain needs a device and internet, in principle more accessible but dependent on tech literacy and connectivity. Reversibility. Banks can reverse fraudulent charges and correct errors. Blockchain transactions are immutable. Secure but unforgiving of mistakes or theft. It's a trade-off between institutional protections and cryptographic guarantees, different philosophies of security. The promise is compelling, the practical reality presents trade-offs. This trade-off is central to the banks versus blockchain debate, security versus user-friendliness, and shapes adoption. So what does the future hold? Will blockchain deliver a knockout blow to the heavyweight champion of finance? The overwhelming consensus among experts is, probably not. The idea of complete replacement is seen as unlikely. Banking is too embedded, too regulated, and provides essential services blockchain isn't ready to offer. The future is more likely to be integration and evolution, a hybrid model. Banks won't disappear, they will adapt, incorporating blockchain to improve efficiency and security. We're already seeing pilot projects and permissioned blockchains for instant institutional settlements. Central bank digital currencies, CBDCs, are another major development. Digital fiat liabilities of central banks. Countries like China are already piloting digital currencies, dozens more are researching them. Experts see a more diverse landscape, traditional bank accounts enhanced by blockchain backends and decentralized wallets coexisting. Competition will pressure banks to lower fees, improve services, and be more transparent. The result? More efficient, more accessible, more dynamic financial services, a healthier ecosystem for consumers. So, after this whirlwind tour of ledgers, hashes, and financial systems, what have we learned? Banks provide stability, a wide range of services, and crucial safety nets. Blockchain offers a radical new model, decentralized, transparent, secure. It promises lower costs, greater access, and more user control. Yet scalability, regulation, and human nature temper the dream of a fully bankless world. Blockchain is powerful but not a panacea. It faces technical hurdles and lacks consumer protections most people expect. Therefore, the most likely outcome isn't conquest, but coexistence, a synthesis. The future of money probably isn't banks or blockchain, but banks and blockchain. We'll see banks adopt the technology, CBDCs, tokenized assets, and regulated blockchain-based products. DeFi will keep pushing boundaries while traditional institutions improve, competition that benefits consumers. The future is being written in code and in boardrooms. It's a story far from over. Thanks for watching. If you enjoyed this explainer, like, subscribe and let us know, will blockchain replace banks?